Live on Interchain Live. This is Ryan Munn from White River Junction, Vermont, sharing with you another exciting story about an entrepreneur in emerging technologies. I've got with us today Mike Revy of Florida and of Bulla. We'll get into what that company does in a little bit, but first, Mike, thanks for being here today.
Great to be here, Ryan. Thanks for getting me on the podcast. Can't wait to talk about Bulla.
Awesome. So I want to start folks off a little bit of background. You are a fellow entrepreneur and doing some really incredible things, but share with us a little bit about that backstory of what your professional life and experience was prior to starting this company.
Okay, great. I started when I was, in college, a little earlier, high school programming. And at the time, there was such a demand for IT tech people to hook up LANs and, do all that kind of stuff that I was quickly in business. So I had a consulting business for about almost 15 years or so as a kid through college and high school. And basically I modified people's accounting packages and their LANs and, just kept their systems working. And then ultimately, though, at the time, there was a huge demand for quants on Wall Street, especially ones who were good programmers. And I happen to be a pretty good programmer. So I got a job on Wall Street and I became what's called a quant. I'm not a super quant. I'm just a regular quant. Like I don't have a PhD in math, but I'm pretty good at math and modeling and building option, trees, things like that. That's what I was doing at Wall Street. And then eventually I made the transition, few people do on Wall Street, but to trading, because at that time, again, there was lots of poaching going on for traders. And one day I came into the trading desk and they were your trading. So I went from kind of building models to manage risk and look at positions to then actually trading them. And I did that for a long time on Wall Street, went to the buy side. 2008 and 9 happened. And that's when I discovered money is political. Didn't realize it then. And I discovered Bitcoin. Didn't buy any, unfortunately. But 2011 I did. And discovered, though, I thought it was going to be programmable money. And what I had been doing on Wall Street was asset swapping and building models and, doing all these kind of arbitrage things. And so I thought that's what Bitcoin would be. It's more like move, add, subtract. But then Solidity came and I got into Solidity, and Solidity is programmable money. Nice.
So 2011, got into Bitcoin. It's more of an accounting thing than it is programmable stuff, although that's changed more recently.
It's changing, yes.
Yep. It's all in motion, right?
Yeah.
And so taking that programming background, you were able to pick up Solidity and start to apply that. So now I take it you got in on Ethereum, and that was where you broke ground on learning and playing around with Solidity and deploying some things.
Yeah, 100%. I started doing, just odd programs that came to my head. First one was, what would we call it? We called it Budget Buddy. So
okay.
you could build it was a token that you would join, and then you would post your expenses to the group, and everybody then was liable to pay you back. Of course, you could rage quit if somebody posted too much money. Anyway, that was kind of a fun project. That was on using Remix and some really bad React front end.
Okay.
Then I did a few other things, and I realized I had kind of an aha moment. Remember, I mentioned money is political. Money is also debt, at least fiat. And I realized that business is about credit and not necessarily about money. So it's my view, and I told you this before, but business starts with credit and ends with payment. And if you can express credit, like I was with these buddy budgets, hey, you owe me $100.
Yeah.
Then you can start to use blockchains for business applications. And that's the beginning of Bulla.
Oh, wow. Excellent. So how long did it take you to actually get Bulla, or bring us up the timeline? So when was that?
This was 2018, 2019 when I was just fooling around.
Okay.
2020 is then I got serious. 2019, middle of 2019, started really programming a lot. I wanted to do just basic invoicing, and have a dashboard and, keep track of things. And then 2020, we finally deployed our first version on ETH mainnet, and then a couple of other weird chains later. And yeah, the rest is history. I got really the good, the bad. Then I got somebody professional to do the React.
Okay. A little better user interface.
Oh, yeah. Not just a little, quite a bit. But
Okay.
And then I started committing a little more capital just to get it, working. I wanted to show it to people. At first we had thought, what we had thought was, well, we'll just build a protocol to do claims. And anybody can use it, open source. Isn't this great? And of course, everybody was, oh, that's wonderful, Mike, but nobody uses it. So then we thought, well, let's add a kludgy front end, and so people can use it and see it, and maybe they'll like it. And then that's the path to more programming.
Gotcha. Yeah. So you got the bones working, open source, the guts of how this functions, and then got that user interface to start bringing on some actual activity. And was it like flash in the pan, all of a sudden there's activity, or did you find yourself having to go out and really draw that activity in from certain sectors, certain industries?
Yeah, at first we got some interest from DAOs. Because we still have a very good batch, and you can really keep track of things on Bulla. But then the DAOs had their demise, and that went way down. We had then a bunch of early competitors who, in my view, were very Web 2.5 that everybody started using instead of us. We are native. We're the most native I can think of. We are true P2P accounting. There's no Azure database somewhere. It's me to you directly. And a lot of these other guys where it's me to them to then somebody else. Yeah, they do it on the blockchain, but it's still via their hosted service kind of thing.
Gotcha. Okay. And so is this all visible? In other words, someone can kind of see everything that's going on with the Bulla contracts?
Yes, you can see everything that's happening. Yeah. And that's what's great about P2P accounting. There's a gosh, I can't think of the guy who wrote it. It's triple entry accounting.
Yeah.
What's his name? Can't think of his name. I'm sorry.
It's all right.
But the idea is if I invoice you and sign it with my wallet, I'm giving it some credibility, as much credibility as my signature, commands.
Right.
Once I put it on the source of truth, which is the blockchain, if you log in and look at the blockchain, you're going to see your address there as a debtor, which means you have a payable and I have a receivable. So it's that simple. That's what's great about P2P accounting is I'm actually doing your books for you.
Right. Yeah. Now, does that open up a bit of a marketplace for what you're able to do here as far as, an invoicer wants to, well, let's get into that. What now that you have the peer-to-peer accounting, what opportunities is this opening up for the users?
I believe it's the biggest opportunity that I can think of. It's called financing working capital in SMEs and SMBs. So, in business. Right now, you have a difficult time as a regular business financing your working capital. If people are not paying you on time, but they do, you have to manage your working capital. And if you don't, you might not be able to produce more product. You might have to slow things down. You might not be able to get the revenue targets that you want. So what this does is it allows you to put things on chain that express your working capital, your claims against other people. And we've designed a pool. This is a smart contract pool that will finance those. Of course, it's subject to the pool knowing who you are and a couple of other underwriter logic things. But that's the idea, is we can free up working capital for a lot of people. And I think that's a huge, that's a giant thing for business in general.
So the pool is kind of using its own parameters to come up with a bit of a credit scoring mechanism.
Right now, it's a white list. I won't lie to you, but yes, ultimately, I'd like to add things like credit scoring, history, what the wallet did, how many rug pulls were you involved in, that kind of stuff. But right now, it's just a white list, and that's sufficient, I think, in the beginning, because I can demonstrate that it's working. We have been doing it for a very small company here in the States for about, I think, 6 months.
Okay.
6 months for a small amount, but it's been churning, about 200,000 a month or so.
Okay.
And that just shows you that, that you can do it. I mean, that's the utility. And the big complaint always about invoicing is, well, I don't want to give up too much information. You have to make an invoice public to finance it. Why? Because I want price discovery. Why do I want price discovery? Because I want costs of capital go down. So if you're willing to say, well, I want to put my invoices on chain and show that I'm a good credit, I pay them also as a debtor. Then over time, I should be rewarded with a better cost of capital from pools like this, where the underwriter would adjust. Right now, it doesn't. It's just a whitelist. But the way it would adjust, it's interesting. It would say, well, okay, you got a $1,000 invoice. Tell you what, Ryan, I don't know you, so I'll give you 20 cents. And I'll pay you I'll pay you 75 when your debtor pays. Okay, that would be me saying you're an unknown credit.
Right.
And I'll punt on you once. If I know that you've been good, then hey, here's 90 cents. And I'll pay you 8 minus the fee. That's how things will work.
Gotcha. Okay. Interesting. And so, is there any particular industry that has picked this up, or is this kind of across the board? Different folks are using it.
Right now, it's only freight.
Okay.
I think it has application in a lot of industries. The best one is freight. Why? Because these are small invoices. And what's great about blockchains is it's scalable. It's low cost. Audit is automatic, like I was saying. So once you get it all hooked up and deployed, your cost of managing these things is pretty low versus a bank. Like if banks do factoring as well. Right. So it's not a new thing that I'm doing.
Right.
The bank has fixed costs that make it very difficult for them to get into this kind of a space, because the invoices themselves are all a little bit too low a notional value. They need bigger items. They want to do $250,000 at a clip, right? Because that gets them above their operating costs and
gotcha.
Like so this is a perfect industry for it.
Now, you mentioned, the concern expressed about putting the invoice on the blockchain, but talk about that concern a little bit more. Like, what's the real issue or concern that a debtor or anybody might have around that, and what are some of the mechanisms that can be employed to address those concerns?
It's a give and take. So the downside is somebody could observe a wallet and then determine what the flows are for that wallet, right? And it could also watch to see if that wallet's getting late on payments. Okay, so you might not, want your competitors to know.
Right.
Right. I claim on the opposite side, though, if you are improving, you're going to want everybody to know, so your working capital will go down. Anyway, so it's sort of like an exercise in well, I want to be public because I'm not afraid of how I'm doing.
Right. So if you're a good player, then there's a good incentive for that to be public. If you're not necessarily doing a good job on things, then that becomes a disincentive, which kind of is the root of blockchain, right? You know,
Yeah,
we kind of the opposition to blockchain as a lot of the folks that they're not going to come right out and say, oh, we're not doing good things, so we don't want it on blockchain. But the fact is, there's a lot of, you know, fraud, waste, and abuse in the world, and those forces are quietly fighting against these technologies.
Yeah, and I wanted to say too, even if you are, let's say, you know, paying net 190, there might be a group of creditors who would still fund you because you are on the blockchain, because they can see the invoices that they're tokenized, and because they, you know, can see some of the agreements behind it. They'd have to do more due diligence, but at least you could have a bigger pool of potential investors in DeFi than you ever would just with the local bank or local 3 banks, you know, down the street.
Right. Doing poorly and doing bad things aren't the same.
Exactly.
So if you're doing poorly, but you're on blockchain, there's still the honesty of that brings value to the conversation and potentially opens doors and resources that you wouldn't otherwise have.
Yes. So don't be afraid, basically.
Right.
And the other thing I wanted to say too is we have bullet invoices, which means it's just the total. You can do a hybrid invoice and add detail. That detail you choose when you use Bulla to either house it on your database, or you can have us house it. I don't like to keep people's data, so usually I try to store your own data. But that way you can add detail to an invoice without giving it out to the rest of the world.
Got it. Okay. So minimally, it's just the amounts. And so there's some potential competitive advantages or losses to that. But at the end of the day, if everybody's, you know, playing well, then that shouldn't really be a problem.
Yeah. And if it nets you 50, 100 basis point improvement in your credit and your access to capital, then I think it's worth it. I mean, we'll find out where the threshold really is, right?
Right. Absolutely. Now, you said you kind of started with Solidity on Ethereum. Did you start this on Ethereum?
Yes.
Okay. And is that where it's all functioning today, or where are things today?
The best. So I think, let me think. When did the NFT craze start? Well, it was 2022 or 21.
Whenever
21. Okay, so we had deployed. We were chugging along with ETH mainnet, and then NFT craze happened, and fees just went nuts. This is when ETH was still proof of work, you know.
Yeah.
And or maybe it just barely switched over. I can't remember. But anyway, so we had to then start to deploy on all these other layer 2s. And I love Ethereum. It has improved. I hope it will. I'm kind of a bull on Ethereum, but you know, that's look at that's been a mistake for the last long time. Sure. But so we're on a bunch of layer 2s. That's why we're on Avalanche, we're on Polygon, we're on Arbitrum, we're on Base.
Okay.
Couple of others that I can't think of right now. Oh, BNB.
Oh, okay. Yeah.
We used to think BNB was kind of a joke, you know, but now it's huge.
Yeah. So now, you know, when you know, if a company comes looking for this resource, how much do they need to know about Web3 to use your interface?
Not too much. They need to know that it is on a blockchain. They need to have a wallet.
Okay.
So you go to the URL. It's bulla.network. I know that's weird. I should change it, but bulla.network.
Okay.
And what happens is if you have an injected wallet in your browser, and you have to know how to do that, then and then you then what happens is the DApp looks up your wallet on all 14 chains, or I think we're only on 12 chains. Okay. And shows you the dashboard, so you're pretty instantly in it, and you're gonna see all of your activity that you've been doing, and that's that's stuff that's away from Bulla. So you don't have to use Bulla at all. Actually, you can use it just to like, oh my God, what did I do with my wallet? Let me get the ins and outs. We
Yeah.
have some terrific accounting actually. So because I do invoices too. So you can start doing invoices. I have the accounting for the invoicing, but I also have the accounting for all the payments. So you can get on Bulla all of your outs, all of your ins.
Yeah.
There is a transaction matching that's called 8949. It does FIFO.
Yeah.
That's all CSV out. It doesn't do the actual
Form.
Nice IRS form because we thought most people are going to be hybrid. They're going to have, other data that they're going to send to IRS. So here's the data.
Yeah.
Do what you want. So that's how you would get started. But your question, how savvy do you have to be? I would say somewhat. You have to get a wallet. You have to have some native tokens.
Okay. But someone could come without the info, without the knowledge. They could get a wallet and be a first timer and just, hey, I'm a business. I've got invoices. Folks are paying 60, 90 days out, and I want to be able to collect them or factor them. What's that process look like? So from that point, they figure out how to get a wallet. They've got a little bit of, like you said, native tokens. So, maybe some Ethereum on their Avalanche wallet or whatever they've done to get it over to the right chain.
Yep.
And from there, what's the next step?
From there, they can start doing invoicing with other people who are also on chain.
Okay.
And then what you really need to do is find somebody who has a pool who's willing to finance you.
Okay.
And that's the problem we have now. We only have one pool. It's the Bulla TCS. TCS Bulla Settlement Pool. TCS is a company that when you sign up, you sign a credit agreement with them. You send them your bill of lading, and they actually mint the invoice for you. They fund it in a pool, and they send you back a TCS token that you can redeem for dollars. So that's an implementation in the real world. I need to find more people who are interested in making their own pools and offering it to different industries that they understand.
Okay. Interesting. And so help me understand this. Does it require, so the payer on the other side of this doesn't necessarily need to get into Web3. The invoice is going to get sent to whoever owes on that invoice. And that's in the traditional, it's getting emailed or however, right?
You're talking about the current, implement this TCS
Yes.
collaboration.
Yep.
Yeah, what's happening is TCS collaboration is designed to be Web 2.5.
Okay.
Because a lot of truck drivers don't necessarily want to have a wallet. More of them have them than you think because they listen to crypto podcasts all the time while they're driving. They should listen to yours.
Okay. Yep. Absolutely.
But the design is meant to be, here's a token for your problems. That token lands at your centralized exchange in your account, and then you can sell that token for USD.
Gotcha.
And then on the other side, what TCS is doing, they're using Bulla to then batch upload the invoices that are all going out to different people. Right now, it's mostly one. It's like we're using a proxy wallet there even for a lot of the vendors. And then they batch upload it to the pool, and the pool gets them money. That money, that USDC money, is then used to support the TCS token later in the cycle.
Okay, gotcha. So that's how that TCS token has value.
Yes,
then you cash it out.
Quasi collateralized, because that for every TCS token that went out, there was an invoice that was minted and funded.
Gotcha. So which exchange is that on?
It's on INX exchange right now.
Okay. All right.
It might be a little limited, but because we're working out some of the kinks.
Yeah.
Again, it's interesting to me to facilitate the market and people's use of crypto weirdly, we are giving you something in DeFi, but then we're bringing you all the way back to trad.
Right.
If
Right.
you know what I mean.
Yeah.
It's a beginning, and I
Yeah.
think it will become more people. I believe people eventually will say, well, I don't want to settle in dollars for this token. I want USDC.
Right.
Because I want
Yeah.
to pay somebody in USDC.
Right.
And
Yeah.
once that happens, then you're going to get more business uses for USDC or DT than
Yep.
you have now.
Okay. And it can be traded on decentralized exchanges too. That just requires whoever to say, yep, just send it to this wallet, and then they go ahead and engage with the decentralized exchange.
Yeah. Right now, the TCS token is not. There might be a Uniswap out there. I doubt it.
Okay.
It's pretty controlled token.
Yep.
Because, like I said, we're just issuing it to people that send us invoices. So it's kind of not yet a big.
Right. There's not a whole lot of trading. There's not a
No.
lot of volatility there. It's more of a value token.
The value token. Yeah. It's kind of weirdly a stable token.
Yeah.
And that's how I would view it. I think, though, there are plans, TCS plans. I don't want to, just talk about that, but having a token you can always add utility to a token, right?
Right. Right. So, and just to clarify for everybody listening, the TCS, that entity is completely separate from Bulla, right?
Yeah. They just use our software. We have a partnership with them.
Yep.
Because in the pool, if there is a problem, if there's an impairment, then I have recourse. So I do have a credit agreement with TCS so that when they use the tools, there is recourse.
Okay. And who's invested in the fund that's funding these invoices right now? I'm
looking for investors right now.
Okay.
I seeded it with my own capital, bravely.
Okay. Yeah. Gotcha.
That's what crazy entrepreneurs do.
Yeah.
But now I'm thinking of doing an investment round. It would be something like a safe plus warrants.
Okay.
Where the warrant is basically putting money into into a pool, into the invoice pool, right?
Yep.
Because you need two things. The problem with my entrepreneurial business model is it's a quasi marketplace.
Yeah.
And that's very difficult because you have to get two or three people to agree to use it, right?
Right.
So what the model usually is now, or I've seen it elsewhere, and there's another, not a competitor of mine, but a similar company to what I'm doing. They're doing kind of the same thing. So they don't need a lot of money to continue to develop, but they need liquidity to seed the pool and get it started.
Got it. Yeah. Okay. So is the TCS pool open to the public? Like, could Web3 investor find that and
it would have to be accredited. It would have to be accredited and through an investment round with me right now. Sadly.
Got it.
It is built though.
Yeah.
To do exactly what you are suggesting. You have a wallet. I want to deposit. I want to redeem. If you have, if the pool knows your wallet address, right? So if you want to redeem, you can, and it is designed that way. But there are so many it's an unregistered security. You're mingling money. There are issues that I need to clarify before I would make it open to the public like that.
Got it. So it's really it's sitting behind under the curtain. Basically, you could flip the switch and all the degens of the world could start buying up TCS tokens and filling this fund.
I wish. I hope we get there.
Yeah.
Not yet, sadly, but that's the direction we're trying to go in.
Got it. Interesting. And so, is TCS serving anyone else in this space, or is this something that you built up with the partnership?
TCS is its own company. They have the right to get a credit facility anywhere they want.
Okay.
They like the Bulla solution because remember their token is on Polygon.
Okay.
So they're a natural, a buyer seller on DeFi.
Got it.
but they've also have some banking relationships that they could potentially use and do it a little more trad, a little less super DeFi.
Got
We'll
it.
see where it all ends up.
Yeah.
At the end of the day, TCS is a business, and they need to, I don't know, get serve their customer and their needs.
Right. Okay. Interesting. Awesome. So yeah, so I guess it sounds like you've got a couple different things going on in terms of where this goes from here, right? So talk about that a little bit. What are some of the, I guess, what are some of the thresholds? What are some of the upsides? What's the broader customer that you kind of see coming next?
I see a lot of credit unions. Credit unions are very interesting to me. I think if you think about a credit union as kind of like a DAO, a credit DAO. I hate to use the word DAO because that means so many wrong things. A purpose DAO, let's say, for credit.
Yeah.
So let's say you set up in some city a credit facility for doing projects around the city. The city could put money into that pool, and then know addresses for vendors that are building things or executing on contracts. And they could then access the pool if payments are slow, or just direct loans. We have the same idea as invoices. You can do on Bulla, you can do what's called a friend lend.
Yeah.
It's a little degen-y, probably should be called biz lend, but it's called friend lend. Basically, it's just I send you an offer, you accept, you receive USDC or DT, and then it mints an invoice back to the sender.
Yep.
And we can then finance those as well in a pool, because the pool understands what a claim is. So as long as you tell it, well, here's the address, we can finance. So I think credit unions are a great application because they can then keep track of everything very well. They know that the members, right, of a credit union are already known, KYC'd, AML. Yeah. So it seems to me this is a perfect little tool for getting credit unions on chain.
Interesting. Yeah, and I think the statistic I read recently was 140 million Americans are members of credit unions.
Yeah, and they're great because what you could do then in that, purpose-driven, I need a better word than DAO because everybody hates DAO, but the organization.
It's a member-run organization.
Member-run organization where you can vote on what the underwriter logic really is, what the target rate is. You could even refine it to each member, like what is their status, how much have they borrowed, how well have they behaved, kind of thing. Right. I think it's a great application. So you get that kind of logic on top of the basic infrastructure that I've built.
Yeah.
So in another way, I can say Bulla is pretty much a conveyor belt of claims that could go into any kind of pool for any kind of business purpose endeavor.
Okay.
And that's where I'd like to go. I'm talking to, somebody I'm talking to.
Yep.
In the legal sphere, and talking to a couple of other people in the e-commerce sphere now, because there's a lot of inventory purchase order, like an invoice. A purchase order is an inverted invoice. Right.
Yeah.
So I'm indenturing myself to you for a product instead of, me. I'm self-indenturing myself for you.
You could be factoring purchase orders similar to invoices.
Very, very easily. And that could sit on top of a whole supply chain system and really, I think, make the wheels of commerce, turn a little quicker there.
Now, I don't know if you'll know the answer to this, but what about like banking privacy concerns? Just similar to, we mentioned, the competitive concerns around privacy invoices, and I think there's some fair give and take there, but but in general, yeah, that transaction basis, that volume, who it's actually tied to, is something that banks are very sensitive about. Credit unions similarly have to protect that individual privacy information. How do we do that so that we still get the benefits of the transparency and accountability that Ledger provides, while maybe somehow obfuscating, obscuring, or completely locking up that public visibility into those details?
I don't have an answer for you right now. I think it lies in some kind of ZK element. Yep. And just understanding in a better way what is public anyway.
Right. Yeah.
And what is not. The reason I say that's because corporate bonds trade, right? And corporations post their Q1s,
Yep.
or quarterlies. So they're willing to show enough data such that people can price their bonds, within, let's say
90-day stretches, right?
So it's the same idea. Like, I think as long as you're focused on, well, I need to provide sufficient data to get credit. Where is that trade-off between public and private? And how much does it hurt me? How much does it benefit me?
Right. And also there's that lag, right? Right now we have lots of market impacts of lagging data. Whereas if that data can be real time or near real time, we could have a lot more accurate market responses.
Yeah, it's very interesting you mentioned that. There are companies that do the streaming.
Mm-hmm.
I can't think of the one right now. I always look at it. But here's a great example. A bond matures, right?
Mm-hmm.
It pays coupons, and then at the end, it's got some giant payment to be made at maturity.
Yeah.
Right. If it's been streaming the whole time, there's no cataclysmic event, right?
Mm-hmm.
If they default. But a lot of times they'll default because, it's just a cliff. It's like, oh, well, the bond was trading at 90 and now it's at 20. And it's 2 days later. I think that's kind of stuff will go away.
Okay.
Because the market, why would you want to, I'd much rather buy a streaming bond or something that's paying in more regular increments. And you can do that with blockchains. Right. And then the alternative, and wait for the lag. And I'm the dummy. I'm the last guy to know.
Right. Yeah.
The guys have no money in their treasury. Plus, they, again, too, looking at people's treasuries just to see if they have the money. That's probably sufficient. You wouldn't even have to stream it. You could see, well, the cash flow in this wallet is way sufficient to pay principal and interest, and the rate that they're paying interest is higher than what they can refi at. So I got no worries, right? I think anyway. I'm digressing. Sorry.
Yeah. No, but that's really, really solid points. So so let's bring it back to Bulla. What is I guess your fundraising now? Is that the current state? And,
yes.
And what are your targets? What are you kind of looking for in investors? And
I'd like to raise. I got to talk to my lawyers, but it's going to be a safe plus warrants around 5 million total. But most of it would go into the freight pool. Okay,
gotcha. So if there's interest in other pools, that would be a separate raise, or maybe that pool would subsidize as it has activity.
Yeah.
Yeah, interesting. Well, this is all pretty exciting, I guess. So you said it earlier, Bulla.network is where folks can find more information. And is there some place for them to sign up to keep posted on the fundraise activity and opportunities, and how folks kind of keep posted on it?
Yes, on the website you can sign up and get information or get on the list. And we have a terrific blog, by the way. I have a couple of people working on a blog, so there are goodies there.
Awesome. Good nuggets.
Yeah.
Golden nuggets. Awesome. Right on. And as far as industry players that might realize, hey, we could really benefit from more liquidity, factoring our invoices or purchase orders. Is that something they could get in now, or do they need to? Is there something more that they should do to prepare to have a conversation with you?
Yeah, you mean on the current people that are doing this kind of finance?
Yeah. Yep.
I think if you're a company that's doing it in the traditional world, you really understand your business. You're a bit of a boutique, and there are bigger people on top of you. I think you can get some competitive advantage by dipping your toe in and starting a pool, understanding how it works. And because I do believe it will get you access to more capital, because I do believe the on-chain world will slowly become, it's only gotten bigger.
The world.
Yeah, and at least in terms of users, I guess in terms of market cap has gone down quite a bit lately.
Right. Yeah.
But it's just a way to diversify how you're doing things, and it might give you some competitive. I think it gives you a lot of competitive advantage.
Awesome. Well, thank you so much, Mike. I really appreciate you sharing your knowledge, and this super powerful innovation. I think has a real major real world traditional world impact as folks learn how to use these tools and see how they can be used today to affect their business and even their local economies. So thank you so much for joining us today, and really appreciate having you here.
You're welcome. Yeah, Ryan, thank you.
Awesome. This is Ryan Munn with Interchain Live and Mike Revy with Bulla. Really appreciate y'all listening.
Right.